You have our gross profit for 2016. Then you less, these are less overheads. All expenditures, you have to less them. Administrative expenses, operating expenses gives you your operating profits. So this is your operating profit. That's why we won't say operating profit is the same as the net profit. Malik. Yeah, please. So look at for administration and operating expenses, the admin of the company, the amount you spend in operation, because day in, day out activities that you do. When you take both of them away, you are getting your operating profits. Now you go to your other expenditures, like the finance cost. What are finance costs? It could be the interest you have to pay. Please put it in mind. Your finance cost will be what? Interest, maybe interest on loan. You might have taken loan from the bank. You pay interest, yes or no? Yes. So that is part of your finance cost. As soon as you take it away from operating profit, you have your profit for the year. Then, when you know your profit for the year, you need to pay taxes, yes or no? Yeah. When you take taxes, you will have a profit for the year after tax, profit after tax. That was talking about the other time. So the business has to make profit. As soon as it makes its profit, before the business starts distributing profit, it has to pay its taxes. Do you get it? Yeah. So that's profit. As soon as this is done, then from this figure, you can distribute your profit or retain your profit. Is it clear? Any question about this?
Can you repeat it fast?
Sure. This is a typical statement of comprehensive income. We have this statement or this financial record because we have sold and we have purchased into the business. What we purchased, the amount we spent to purchase, the amount we spent in cost of purchasing that product is part of our cost of sales. So your revenue minus your cost of sales makes your gross profit. This is the gross profit. Then you need to understand your operating profit, which is part of the daily activity of the business. So your administrative expenses, the overhead expenses, the company's expenses in the admin, other operating expenses, operations, gives you your operating profits. So your operating profit is gross profit minus operating expenditures. Gross profit minus operating expenditures gives you your operating profit. Then that takes us to finance cost. Your finance cost will be example of finance cost is the interest you have to pay on loan. It's an expenses. Your loan is separate. Your loan will be part of your financial statement. Please be here. Your loan, the loan you take from the bank, is not in the income statement. But the interest you have to pay on the loan is part of your income statement. Loan is a financial statement. It's going to be part of your statement of financial position because it's a liability. Do you get my point? But interest on loan is an expenses. It's a finance expenses, a finance cost. The loan itself is a liability which will be recorded in your statement of financial position. The interest you are paying will be recorded here as a finance cost. We have the finance income too. The interest you get because you have saved your money in the bank. Do you get the point? Yeah. So that's, you add it to your gross profit. Do you get my point?
Yeah.
Okay. So that's interest on loan. So this minus your operating profit gives us our profit for the year. As soon as you have your profit for the year, you have to pay taxes. Because this is what you reckon. This is what you're going to give in terms of record to the government, which they're going to charge tax on. Do you get it? You need to understand your profits for the year. That is the record you show to government before government taxes you. Then as soon as you pay your taxes, as soon as you get rid of the tax, then whatever is left can be distributed or retained. It will be distributed because you have to pay your shareholders dividends. It will be retained if you are not paying shareholders. Is it clear now? Sure. Shall we move on? So these are the components. It's just what I explained already. These are the components of the statement of comprehensive income. Revenue, the amount of money you make in the course of selling the product. Cost of sales, the amount you spend in the course of making the product available for sale. Gross profit, your sales or revenue minus cost of sales. Administrative expenses, cost incurred by the admin of the business, the office. Operating expenses, so any expenses not included in administrative, all the expenses that are not here can be here. Selling expenses, it's okay. Operating profit, we said already, your gross profit minus your operating expenses. Then the finance cost, okay? If a business borrows money, I said that already, the loan you take, and your finance income, the money deposited in the account, the money you save, you get finance income. The interest you get because you have saved money to the bank is finance income. The interest you pay because you have borrowed money from the bank is finance cost. Is it clear?
Yes.
Scroll down, please.
Notes.
The notes?
Yes.
Okay, great. Okay, scroll down, next time. Thank you. That first.
So where's the
You have the video. It's in the video. Okay. Should I continue? Carried outward. So, example of selling expenses is, please look at that. Example of selling expenses is your carriage outward. Carriage inward is different from carriage outward. Carriage outward means the amount you spend to transport the products to your customers. That is carriage outward. Carriage inward is the amount you spend to bring the product into your own premises. I think it's clear. So this is an example of selling expenses. Operating profit.